Well, hello folks, I'm L.A. Little and this is your weekly NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves what happened last week. What does it tell us about the coming ones? I do a show every Sunday night, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. You can subscribe there, and anytime I push content, you'll be notified. Easy way to keep up with what's going on. As far as what is going on, well, about, I guess it was a month ago. Let me see here. I wrote an article, popping down here to see when it was. Right here. Change your strategy, market characters changed. Looks like that was March 12th. So, what, 5 weeks ago. So 5 weeks ago I said, this market has changed its character. It's probably not going anywhere. We're just going to thrash. It's going to be like a roller coaster. And that's basically what we're getting. You get a week up, you get a week down, maybe you get a week and a half up, a week and a half down, whatever it is. Last week, bottom drops out on Friday, and we're still basically at zero on the listed issues and still at that 3.5% or so on the other two. So it's the same thing that we kind of thought might happen is happening, and that is this market really just isn't going anywhere. Let's look at the S&Ps. We'll start with the daily chart. You can see that damage on Friday. The bad thing about this, and I don't do classical TA anymore, but you essentially have lower highs now. And if you want to take the other side of it, you actually have 4 higher lows. So, one can argue, and a lot of people probably are drawing in stuff that looks something like this, right? I don't really do this anymore, but a lot of folks are buying it, drawing that in. A lot of people will say, hey, it means nothing if it gets way out here because the apex of the triangle gets too tight. You're not going to get any oomph for it. What you're going to get the oomph is if it pops out here, it pops out here before it gets way out into the apex. I don't know about that stuff. I practiced classical TA for 2 decades, and it got me nowhere. It wasn't until I created neoclassical that I started to really get somewhere and really be able to see some of the things that are taking place that allowed me, to position myself more appropriately and not get hurt. Making money is not about outrunning the market on the way up. Yeah, it's great if you can. The main thing is you want to kind of keep pace, and you don't want to be there when the bottom falls out. And so, when you get up here and you get a bottom like this, you don't want to be 110% invested or 150% or whatever it is, right? You take a day like that, and then you're not going to want to be buying it when it's probably time to buy it. So you have to be able to kind of tell, when a market character has changed, so to speak, and when you need to be doing something different. The other thing you need to do is you need to be able to figure out when the danger is greater on a longer term perspective. And when I'm looking here, we're looking at the daily chart. So the daily chart's not going to tell us that, but we can see a bunch of swing point lows that are all lined up now in this general area from about 2060 to 2040. Folks, that's where all the anchored support exists now, right? You see it here with the green on the TA Today charts. If this gives way, we are going to go right down here, right? We're going to push right down to the other side and try to check that side out. So the series of events that would take it down to here, of course, are the breaks of these swing point lows. And I think that's going to be hard to do, not because of this particular chart so much as if you just think about it, unless you come down and you kind of just like hesitate in this area for a while, you're going to have already transpired a good number of points, just like we've been seeing before, where you come straight down, it's hard to keep going. You tend to get some sort of a bounce, and then these bounces tend to go straight back up, straight back down, straight back up, right? The roller coaster. And so the only way that you'll get that breakout is just like, a month ago I was talking about. The way you get a breakout is you come up, you test those prior highs here, right? And when you pull back, you don't come back very far so that you can get a good running start at it the next time. And it would be the same case here, right? You come down, you kind of mill around a little bit, you know, whatever you're doing here, and then eventually you blow it away if that's the way it sets up. So, you know, I don't think that you're going to see a big decline immediately. Now, it can happen. I mean, we've been milling around a long time, and we have to look at the weekly chart to see that. And that is that, and I've talked about this before as well, is if you take and look at these things, right, you had big ranges, and actually, let me redraw that. You had big ranges that transpired, you know, a long amount of time and a large number of points. But they've been getting more and more narrow, less and less time spent in those ranges. That typically is what a lot of people look at as some sort of a, you know, a rolling top, so to speak, right? Now, I don't know if this is a rolling top. What I do know is that the danger, those swing point lows we saw back here on the daily, right? The danger is that these do break eventually and bring you down to the weeklies. Those will also be daily swing point lows and weekly swing point lows probably forming at that time. And if they start breaking, right, then you're going to have monthly ones down here before you know it. So I think the risk is that this market eventually rolls over and you start breaking all this stuff. But you know, that's the kind of structure that builds out, and you know, if it's going to take place, it will show itself and you'll be able to see it. The other thing I would point out is that the risk, you know, if it doesn't hold here on this time frame, you know, the swing point lows, the support zones are quite a ways down, right? And so you got a fairly large amount of points you can lose on the way down. And so when I say, you know, you want to be careful when the risk is higher, that's when you really have to be more careful. And if you go to the monthly chart, you can definitely see what I'm talking about, because that monthly chart doesn't have support until you get back to the 1800s. I mean, folks, we're still at 21. You know, that's 300 points off of 21, and I don't have to do the math for you, but that's roughly what, 14% or so? That's not a small number. And that's the sort of correction that we've had before, you know, here, and we actually had it, you know, back over here. That's the sort of correction that can take place at any point, 10, 15, 20%. And you really don't want to ride that down and hope that it's not really the big top, right? Because if it's the big top, then you may be looking at 30 or 40% down, right? Where you come all the way back down to these highs. And believe me, that would be painful. So, you know, you don't want to get yourself in a position to where things cascade against you. We're not in that position. We could be in that position. You know, I just point out that the structures continue to form, and if they continue, then you've got to get even more worried than you should be at this particular point in time. One of the reasons, and I want to finish up this section here with this, is one of the reasons I say that it doesn't look like we're probably going to break yet, is that if you look on the NASDAQ, and I'm on the daily, you know, this swing point high on the NASDAQ really has never been tested. So in other words, you got the breakout on this bar. That high on the swing point was 477.418. The low on the next bar, 4,780. So you never came back and tested. You go up, and folks, you've been going sideways now for roughly, looks like about 8-10 weeks without a test. So you're 30-40 bars into it already, and there's no test. That kind of a setup, when it finally comes back, you know, to test back into this area, it was a confirmed breakout, more than 6 bars. We're talking 40, 50, 60 by the time it gets back. That probability of a test here failing versus bouncing is very low. The probability of it bouncing is very high. And so when you look at the NASDAQ and you think about this structure here, unless things are a lot worse than you think, those probabilities are probably going to bail this market out, And that would mean that as those other indexes came back to test into here, and let's say if they got under those swing point lows, if we go back to the S&P 500, let's just say they get all the way down into this deep area and it looks like everything's caving in. Well, at that point, the NASDAQ would just be coming back to do the retest regen. And the probabilities are fairly high you get a bounce out of there. And if you think about it, that's probably the ideal case to blow out a bunch of stops. And that is that you come down and you get underneath these. Everybody thinks this thing's going, south. And then that NASDAQ kicks in on its retest regen and boom, you're right back the other way. So, keep that in mind as we go forward. I've got some viewer questions about gold. I want to talk a little bit about overseas markets because that's really what's driving us as we wrap up the show here tonight. So I'll be right back with those thoughts. So as we come back here for the viewer questions, you can ask me questions. If you pop over to the site, click on NeoTA TV, pop down here, there's some methods that you can send me questions. I always ask if you give me some sort of a direction and time frame, it helps me to help you. You can also, people are getting innovative. I didn't think about this, but over on the YouTube site, if you pop into YouTube, you can leave comments here. And there was one left this past week. Hi LA, thanks for publishing these videos. Great insight. Could you please share your thoughts on gold in the next video? So that's what we're going to do here now. Let's take a look at the gold market. But you can't really talk about gold unless you talk about silver as well. So let's look at silver first. Now, I didn't get a time frame and what they were trying to do. I assume they're wanting to buy gold, and so I'll just assume it from there. I don't know what time frame they're looking at. I would assume probably the shorter term time frame. So speaking of silver to start with, let's do a quick analysis here and then go to the other one. You actually have a range up top and a range in the bottom. They're about equidistant. It's fighting to stay in that higher range right now. That also corresponds with the volume, and if you look, it's this area here, the volume bars, this one and this one, right, kind of set up that little zone, and that's what it's trying to hold on to right now. So when we look at silver, it's fighting right now to hold on to that zone. Now if it loses it, then it's hands off back down to here. So it's a key area, right? Need to hold. If you don't, all the way back down to the bottom. So that's silver. That's on a short-term time frame. If you go to the weekly, silver looks, it looks as if it's trying to turn higher, but it's really an ugly chart. The volume flows is the way I see it on the upside, in that you're getting better volume flows. In particular, I'm looking at these here compared to the selling bars. Right, looks a lot better. So it looks to me like it's trying to put in a bottom, but believe me, these bottoms take time. You get a move down, a little bounce, a big move down. This takes time to roll over and start heading back up, and you can really see that in silver if you come back over to a monthly chart. Silver has been a straight shot down now for, what is this, 2011? I was doing a show when this thing was topping out. It was a Dallas radio show, and I didn't call the top, but I basically said, I would certainly be careful here and start booking profits. And then ever since then, this thing has been straight down. Now, there's no way I thought it would drop this far at the time, but then again, you never know what these things are going to do. So anyway, silver straight down. The key part that you have to pay attention to now is once silver got underneath these lows, these became bearish retest regenerate zones on any kind of subsequent push back to the top side on the monthly chart. So the low over here 1743, the low over here 1775. So at 1743 up to about 19 is the key area. Where did we bounce to? 1769. So we come up into it, retest it, and now we're trying to regenerate lower. So right now on this time frame, silver is trying to generate or continue the generation on an ABCD structure that still has a ways to go, and it's trying, off of this test, trying to regenerate lower. So the backdrop on a long-term time frame is ugly. And so you want to keep that in mind if you're trying to buy gold or silver at these prices. Now let's flip over to the gold chart, since that's where the question was. You kind of got the same setup. Volumes here look okay, but again, this could easily come down and test again. If I look at it on the weekly, there's a little bit better volume tells here, so I'll spend a little bit more time on it here. So you get a test of this low. As a matter of fact, I don't think it actually tested a low, it just got very close. 109.67 got to 109.77, so within 10 cents. Volume's 39.3, the volume over here was 41. So the test itself, when I look at this test here, came down with almost the same amount of volume and did not quite test a low. So that tells me, hey, we can test it again. Now the good part, if I look at this chart, is the nice volume spike as it went up. The bad part of that is that probably was just short covering. And that's why it came back down just like it did. And so when I look at gold and I look at it from this perspective, gold to me still hasn't showed us that it's made the turn. There's a range here, just like we were looking at silver. There's a range here, and this is on the weekly, not the daily, and you've got one up top. And so you kind of got these two ranges, and it's trying its best to get up there back into the higher range. So you've got, on a weekly basis, you've got gold trying to get up higher. You've got silver trying to hang on a daily basis, right, to its range. And these are the key tests. I mean, you're right at a critical area. So what would I do if I were trying to trade this? I'd want to see it get back over this area. Matter of fact, it's right there. If I could see it trade back up here, I think you got a shot to go back and test the highs. That's the way this thing's set up. That's the way I'd be trying to look at it and potentially play it. And one last thought, if I go back now to the daily, you got a swing point high here. That price point is 117.47, and if I come back to this price point, 118.48. So somewhere between 117.5, 118.5 is the key area. It has to get over the 118.5 to make me think it can go back and test the highs, which is about 126, 125.58. That's the way that lines up. Let me pause with that, and I'll come back and we'll do the final thoughts. Coming back for the final thoughts here, I want to press home one thought tonight that we really should take to heart, and it's a thought that the U.S. no longer is in control, the U.S. equity markets. I can't remember ever saying that, and I've traded these markets for 3 decades now, and Is it really the case that the U.S. markets don't drive the world economic order anymore? And I think more and more that is the case. I mean, if you just look at it from an economic standpoint, the world market is bigger than the U.S. market. For so long, the U.S. market dominated everything, but that's not really true anymore. And with the advent of QE and the U.S. pulling back from QE and the world market embracing it, it makes for a very interesting story in that Europe, Asia are really the drivers now with respect to the U.S. markets. We don't have economic numbers or earnings that are driving us. We're getting bounced around by what's happening overseas now. Last Friday, big sell-off. What happens to us? Big sell-off. As these markets go up, what happens to us? We get pulled up. Right? That's what's been happening. That's what continues to happen. It's not us, it's them. And if we don't recognize what really is moving our markets, then we don't know what to watch. And right now, my take is what to watch is over here, not in the U.S. markets. So if we take it from that perspective, what we have happening on the CAC, which is the French market, we have a retest, regenerate. It's trying to come back into it. It's more than 6 bars. It should bounce out of here and get a little push back up. So that, and then whether it goes to new highs or not is a whole different story. My suspicion is we're probably setting up some sort of a range after a big move up, right? Big long move up, probably setting up some sort of a range now up in here. And the first part of that is probably, you get a good bounce on the first pullback, and that's what we're getting. We're getting the first pullback. Volume's pretty heavy, but volume's pretty heavy as all, overall, which makes me think that we're probably starting to set up some sort of a range. Now that's what happens to be the strongest right now. If we move over to the DAX, it's a different story. And the story over here is different in that you've got a swing point high here. It was up higher. And you can see the fringe market has been stronger recently than the DAX was. The DAX was stronger initially. So what happens? This comes down on Thursday, does the retest, and on Friday blows it away. And so again, this is suggestive of some sort of topping consolidation type area. Right now it looks like it's here, but if the CAX doesn't bail it out, this really could come all the way back and set up a larger consolidation. So this tends to be the key area, and as it gets tested this week, this is going to be the critical point. Why are we looking at this? Well, because this is going to affect what our markets do. So when I say, for example, that NASDAQ composite probably should hold, I suspect that the CAX is probably going to hold. Or I suspect that, the Hong Kong market's going to pull us up, or, you know what I mean? It's going to be something overseas that's probably going to coincide with what's happening in our markets. If I go look at the Hong Kong market, and I'll use the HSI, here we've had a spectacular run again, and this push up has brought it to a high. You got high volumes, expanding volume. This also looks like it's about to go into some sort of a consolidation. Again, that would suggest that the U.S. markets are probably not going to sky high anymore until these things, find whatever their consolidation range is, and then eventually potentially move higher to take our markets higher. Or if these things have blown off and they're really going to set up a larger range, and let's just take this one and say, okay, does it set up a much larger range to the downside? Well, in that case, our markets will probably get hurt pretty bad. So I believe these markets are the ones that we should watch. If we look at it on a weekly, you can see the spike up. If you look at it on the monthly, you got the same thing. Your over swing point highs, big spike up. It's early in the move when you look at the long term, so I don't think that the thing is over. But at the same time, you have to realize that these have had big moves, and coming back down, they can definitely come down quite a ways. Support is a long way down. So that's where we're at. I think that's what's really driving our markets. I think that's where you need to be focused. As much as on our markets, you need to be focused on external markets. And I'll finish it with a view of the Russell. The Russell breaks out on Wednesday, right, suggesting that this market can go higher. What does it do? Friday, gaps down. Bullish retest regen blown away. You're back inside this big bar. This thing looks like it wants to come all the way back to support. Markets going to struggle more than likely this week. That's where I'll end it. I thank you for joining me, and I'll see you next time around. Have a good one. Good night, folks. Take care.